Welcome to the Roy Morgan Quarterly Update webinar covering the June quarter of 2023. Shortly I'll run through the new rankings in trust and distrust of brands in Australia. But first, we have breaking news. I can reveal that in the year ending June 2023, for the first time since we started measuring trust and distrust in late 2017, Facebook is no longer the most distrusted brand. Facebook has been replaced by Optus as the most distrusted brand in Australia. More of that shortly. As I've said on many occasions, trust is the foundation of all human connections. It gives business leaders license to navigate in uncertain times and to take swift, decisive action when disaster strikes, whether it's economic, social, or some kind of health disaster. Trust is also the underpinning foundation of brand reputation. But this is more than a useful slogan. Trust is the very cornerstone of a sustainable future. Just take the global consumer goods product Unilever. More than 3/4 of Unilever's market capitalisation is created by trust and brand reputation. That's 100 billion euros and a lot of trust. But as we at Roy Morgan say, it's distrust where society's deepest fears, pain and betrayal surface. And that's because distrust embodies the fundamental vulnerabilities, past betrayals and concerns that can erode the foundational bonds and shared beliefs that unite a community. Medibank, for instance, lost $1.6 billion off its market value as its distrust soared following the much publicised data breach. So, how do we measure trust and distrust? Well, we're Roy Morgan, so we conduct a survey. It's a continuous survey and we're now in our 6th year of asking more than 2,000 Australians each and every month which brands they trust and which brands they distrust. That's a sample size of more than 24,000 Australians each and every year. We also ask these people why they trust or why they distrust the brands that they nominate, and we record exactly what they say in their own words. This research is open-ended and completely unprompted. And what that means is, for people who nominate a brand, it's so top of mind that they put it ahead of all of the other brands swirling around in their consciousness. In summary, what we have here is so much deep qualitative data that it's quantifiable qualitative research. So what have we found? Let's start with the trusted and distrusted industry rankings. This slide shows the net trust and net distrust rankings of key industry sectors. And as I said, net scores are calculated by subtracting distrust from trust scores. Supermarkets still top the list as the most trusted sector in the economy. That's the tallest of the green columns on the left. Residual goodwill carries over after the supermarkets stepped up during the pandemic, and it appears unshakable. Interestingly, in the wake of the PricewaterhouseCoopers corruption revelations, the services sector has slipped 2 places. We'll have more about moral blindness and the moral blindness exhibited by PwC partners and other Australian executives a little later. The technology sector improved, as did pharmaceuticals and insurance. Non-bank financial services and gambling both became more distrusted. Now, final word on industry sector scores. We don't ask about industries specifically. These scores are arrived at by rolling up every brand mentioned in a particular industry. Now let's look at some individual brands and look first at the most trusted brands in Australia. Woolworths again takes top spot as the nation's most trusted brand. Its major competitor Coles not only struggles to catch Woolies, but on the current trajectory, it could lose its 2nd place to Bunnings by the end of the year. Not only is Coles going backwards, but Bunnings is improving. Of the 140 other trusted brands on this quarter's list, Coles suffered the greatest drop in net trust. The Commonwealth Bank continues its dramatic transformation from a distrusted brand to one of the most trusted. This quarter, it's climbed another 3 rankings to cement its place in the top 20 and threatening to leapfrog Bendigo Bank as the most trusted bank in Australia. The most dazzling improver, though, is Macquarie Bank, jumping an extraordinary 44 places. Allianz also did very well, climbing 25 places. Now, losers in the top 20 most trusted brands, that is those that slip back in their ranking, include Samsung, down 3 places, Bendigo Bank continuing its decline, down 2 places, and ING, which has dropped another place to widen the gap between it and Bendigo Bank. That's something that would have been unthinkable a year ago when they were neck and neck. Sadly, the ABC's long decline continues in the June quarter, but the really dramatic action is going on outside the top 20, with Mitsubishi dropping 36 trust rankings and Domino's Pizza down 33 places. So that's trust. But what about the most distrusted brands? As I revealed earlier, Optus has taken over from Facebook as the country's most distrusted brand. I'll look at Optus in more detail shortly. But interestingly, Facebook isn't just second because Optus has deteriorated. Facebook has actually been improving its net distrust score over the past 6 months. I'll also look at that in more detail shortly. And Telstra remains steady as the nation's 3rd most distrusted brand. Looking now at the big movers on the distrust list, AMP continues its slow recovery, improving another 4 rankings. A couple of years ago, it was the 2nd most distrusted brand. Now it's down to the 12th most distrusted brand in Australia. Another seriously tarnished reputation that's improving slightly is the mining giant Rio Tinto. AGL is also finally showing some improvement under the sustainability spell of Mike Cannon-Brookes. It improved 3 places, heading for the exit door from the top 20 most distrusted brands. Outside that top 20, the big winners or the big improvers were Volkswagen, improving 14 places, and Dodo, improving 13 spots. Brands remain in the net distrust rankings until they record more trust than distrust. But the biggest top 20 loser was Qantas, declining another 6 rankings to displace TikTok as Australia's 13th most distrusted brand. Just a year ago, Qantas was on the top 20 list of most trusted brands. Social media brand TikTok deteriorated 5 distrust rankings. Fox lost 2 places to enter the top 20 most distrusted list, and Chinese fast fashion villain Shein also deteriorated another 2 spots. Big losers outside the top 20 are Vodafone, down 16 places, and BHP, down 14 spots. Interestingly, there are no pure online brands on the top 20 most trusted list. Now, let's take a closer look, as promised, at Optus, Facebook and Telstra, the top 3 most distrusted brands. Over the year to June 2023, Optus suffered its well-publicised catastrophic data breach and slipped 12 rankings to become, as I revealed earlier, the most distrusted brand in Australia. This graph shows Optus's dramatic decline since the data breach back in September. Its trust, in green, has remained largely unchanged, but its soaring distrust, in red, is nothing short of spectacular. Distrust is the destroyer, and you can see Optus's net distrust, that's the black line, spiralling down. I can, however, reveal that there's good news on the horizon for Optus. What we're seeing here in this chart is a 12-month rolling average. But in our risk lab, Optus's monthly numbers are showing definite signs of improvement in its distrust. So we should see significant improvements in coming quarters. Recovery from brand shock takes time. And while distrust often peaks immediately after such an event, its levels can remain elevated for many months or even years. I mentioned earlier that Facebook was improving, and this graph shows just how much. Now, before we get too optimistic, I need to point out that there's almost no green, that's trust, and an ocean of red. But the red of distrust has definitely improved since April last year, pulling Facebook's net distrust score up. My prediction is that Facebook will always be more distrusted than trusted. It's the nature of social media, and Facebook really has baggage, but it's improving nonetheless. Now to Telstra. Since the new CEO, Vicky Brady, was appointed, Telstra's enjoyed a sort of reasonably strong improvement in its levels of trust. And even despite fluctuating distrust, and more distrust than trust, Telstra enjoys the best net distrust score since we started our tracking in late 2017. Now, I hasten to point out that the improvement is also in the wake of the Optus breach. So is it the Vicky Brady effect, or is it at least they're not Optus effect that's moving the dial? Maybe it's both. We'll know for sure in the coming months. Over the past couple of years, we've seen a dramatic increase in what I call moral blindness. Well, in truth, it's what legendary sociologist Zygmunt Bauman calls moral blindness. But I'm sure he won't mind me borrowing it for this webinar. So moral blindness describes our inability or unwillingness to recognise moral or ethical issues. It ranges from blatant corruption to leaders simply turning a blind eye and refusing to acknowledge the ethical dimensions of what's right and what's right in front of them. We've all seen it happen at PwC, at Rio Tinto, at Qantas, at Harvey Norman and Crown Casinos. And what's remarkable is that every one of those brands has suffered dramatically worsening distrust. Australians are really upset by moral blindness. They want their leaders to step up, not look the other way. So let's take a deeper look at PwC, Rio Tinto and Qantas. Professional services firm PwC became embroiled in a scandal involving the misuse of confidential tax office information for commercial gain. This crisis illustrates moral blindness through ignorance or willful blindness to the unethical implications of their actions and denial of responsibility by some of the partners. And just look at how Australians feel about it. PwC's distrust soared immediately following the scandal becoming public, and it looks like taking months, perhaps years, before it recovers. But what's interesting about this graph is that there was already public disquiet for almost 2 years leading before the scandal broke, as the AFP and the Tax Practitioners Board carried out investigations. This shows how alive Australians are to moral blindness. And when we look at why Australians distrust PwC, we see extraordinary comments like corrupt, no mechanism for maintaining integrity, or an absence of professional integrity. And one comment that speaks for many: all consultancy firms are amoral leeches, they say. This unforgivable breach of trust has tarnished the entire sector. We can only hope for some kind of moral recovery in the sector, some kind of return to professional ethics. In mid-2020, the leadership at Rio Tinto authorised the destruction of a 46,000-year-old Indigenous rock shelter at Juukan Gorge in Western Australia. In a matter of minutes, 8 million tonnes of ore were blasted from the heritage site so that Rio Tinto could access millions of dollars worth of high-grade iron ore. Rio Tinto was within its rights legally, absolutely, but morally they knew they were doing the wrong thing, or at the very least, what society considered to be the wrong thing. In the wake of soaring distrust and shareholder actions, CEO Jean-Sébastien Jacques and 2 other senior executives lost their jobs. Moral blindness has consequences. Interestingly, this slide again shows that even in the face of dramatic wrongdoing, trust often doesn't miss a beat, just like Net Promoter Score and customer satisfaction. So if all the stakeholders were looking at was trust, In green, they'd have had no reason to revolt. But when we factor in distrust, you can see why the stakeholder action had substance and why the morally blind leadership had to go. It will take years for Rio Tinto to recover, if it ever does. The distress caused by moral blindness really comes to the surface when we hear what everyday Australians actually say. For example, corrupt destroyers of the environment. What else have they done we don't know about? And they destroyed the Juukan Gorge and gave a transparently dishonest apology. As I mentioned earlier, Qantas has plummeted from one of the country's most trusted brands to one of its most distrusted. I know I keep talking about Qantas, but that's just because it keeps getting worse. The decline started during the first months of the pandemic, when customers were shocked to find they couldn't get refunds for their cancelled flights. But it's been over the past year that the decline has become unprecedented. In the 9 months to June, Qantas fell 181 rankings. To put that in context, over the same period, Australia's most distrusted brand, Optus, fell only 18 rankings. That's 18 for Optus and 181 for Qantas. And as I reported last quarter, most of the blame is sheeted home to outgoing CEO Alan Joyce. There was moral blindness everywhere, from appalling call centre delays, cancelled flights and snail's pace fare refunds, to a leader turning a blind eye to the anguish of tens of thousands of once trusting customers. But the biggest example of moral blindness was Alan Joyce refusing to pay back any of the $2 billion in corporate welfare, including JobKeeper during the pandemic, despite the company surging back to billion-dollar profitability. As one respondent put it, Qantas took JobKeeper and then sacked workers, which was what JobKeeper was about. Another said Alan Joyce took major corporate bonuses, but then stood down workers illegally during COVID. Another called Qantas unethical. And this one spoke for many, saying bad customer service, terrible labour practices and dodgy practices around pricing and credits. The unprecedented levels of distrust on the back of Qantas's moral blindness have a material impact. Just last week, immediately before the CEO announced a $2.5 billion profit, hundreds of thousands of disgruntled customers lodged a class action against Qantas in the federal court, with lawyers for the customers claiming Qantas is one of the most profitable airlines in the world, largely because of the funds it unlawfully retained from its customers during the pandemic. It's now estimated at almost $500 million in unpaid flight credits. Now, taking a step back more broadly, during our analysis of data over time, we made a really important discovery. The pandemic made it easier for leaders to look the other way, to avoid facing the moral repercussions of their actions. They had to move quickly during the pandemic without adhering to many of the regular checks and balances, and it appears some developed a taste for it. This new level of moral blindness, under the cover of COVID, led to large-scale problems or injustices, as executives became more disconnected from their own moral compasses. They appear to have become increasingly detached from the consequences of their decisions. But there are costs for the morally blind. The PwC leadership lost their jobs, the Rio Tinto leadership lost their jobs, and the Qantas CEO is faced with a massive class action and a falling share price. If we need more evidence, just look at this graph. Australians now believe that since the onset of COVID, companies have become too motivated by profit. And the consequences of that is that since COVID, the entire economy has become distrusted. So what does that mean? It means that businesses and corporate brands are, in aggregate, now more distrusted than they are trusted. And this is important for the whole country. Why? Why is it important to the country? Well, first, it's important because a lack of trust can cause consumers to decrease their spending, to delay major purchases, or to even boycott certain companies. and this can lead to economic slowdowns or recessions. Second, distrust in the corporate sector can deter both domestic and foreign investments. Investors tend to avoid markets where there's perceived risk, uncertainty, or unethical behaviour, and this can stifle business growth and innovation. Third, distrusted businesses struggle to attract or retain employees, especially if workers value ethical considerations and corporate social responsibility. And this can affect productivity and, again, innovation. Fourth, distrust can fuel social breakdown, with violence and criminality becoming increasingly prevalent. We're already seeing this in supermarkets and other retail chains right now. And finally, if the distrust is rooted in perceived unfair wealth distribution or exploitative profit tactics, it exacerbates social and economic inequalities, creating even further and much more dangerous divisions and social disruption. So what can we do as a country to reverse this trend towards moral blindness? Well, to start with, we should strengthen regulatory frameworks by implementing and enforcing ethical practices. That could include better oversight of the organisation's activities and penalties for unethical behaviour. Next, we should promote social responsibility by encouraging or mandating organisations to integrate social and environmental concerns in their operations and in their interactions with stakeholders. Third, we should improve whistleblower protection by mandating better legal protection for those who expose unethical or illegal activities. This will deter misbehaviour and encourage a culture of transparency. Next, we should encourage board diversity. A diverse board of directors can offer a much broader range of perspectives and ask different questions, and might be less prone to groupthink, which often contributes to moral blindness. Finally, we should encourage or mandate organisations to undergo regular ethical audits, similar to financial audits or cybersecurity audits, to evaluate their operations against established ethical standards. Even though these steps are absolutely necessary, even though they seem like there's a whole lot of them, they are not sufficient in and of themselves. Fundamentally, what we need is for leaders to adopt a decency principle. In other words, to see every decision through the lens of decency. And directors should put distrust on their board's risk register. And they should invite the entire workplace to report unethical behaviour in a healthy climate of safety and privacy. That brings us to a close on this quarterly update. Look forward to seeing you next time.